Hey, what's up, my friend? So, in today's episode, right, I want to talk about how many indicators should you use in your trading. Okay, so a mistake that I see many traders make, and me myself included, I made this mistake, is that in my early years of trading, right, I have at least 4 indicators on my chart. I have indicators like the stochastic, the RSI, the CCI, etc. on my charts, and I would wait for all these indicators to point in the same direction before I take on a trade. For example, I will look for the stochastic to be oversold, RSI to be oversold, CCI to be oversold, and then, right, I would enter the market, right, thinking that the market is about to reverse higher because so many indicators are pointing that the market is oversold, right? But that couldn't be further from the truth, right? Because a mistake that I made is that if you realize, right, these indicators, right, they all belong to the category called oscillators, right? They have similar mathematical formula, right? The RSI, the stochastic, the CCI, they have similar mathematical formula behind it. So when one goes up, the other indicators will point up at the same time. So clearly, right, having more indicators on my chart, right, doesn't reinforce my doesn't increase the probability of the trade working out. In fact, it's quite silly actually. So now the question is, how many indicators, right, should I use then, right? Should I just use one indicator since there might be a duplicate? So that's what we'll tackle in today's episode, right? So first and foremost, right, I want you to take a step back and think about what is the purpose of an indicator. Okay, so in my opinion, right, an indicator, a trading indicator, can be used, right, for four main categories. Right, number one, it can be used to help you to define the trend. For example, you can use a 200-day moving average to help you define, what is the long-term trend. If the price is above the 200-day moving average, the long-term trend is up, right? And if it's below it, the long-term trend is down. So that's the first purpose, defining the trend. The second thing you can do is you can use indicator to help you identify your area of value. So what is area of value? So things like tools like support, resistance, trend lines, these are tools that can help you identify your area of value. And again, right, indicators can help you with it. You can use things like your pivot points, your R1, your S1 to help you identify support resistance in the market. You can use for example, tools like moving average to help you identify the area of value in the trending market. So these are, again, right, second category, right, defining your area of value. And the third thing that you can use with indicators, right, is that they help you to time your entry, right? They help you serve as an entry trigger to get into a trade. So what do I mean by entry trigger? So an entry trigger could be something as simple as the trigger to put you into a trade. Like, let's say, for example, the stochastic cross above 20, that could be a trigger to buy. I'm not saying you buy blindly when stochastic goes above 20, but if all other conditions are met, right, and stochastic starts to cross above 20, you can say that hey, bullish momentum is coming to market, right? When stochastic cross above 20, I will buy. So that could serve as an entry trigger. But more often, people use candlestick patterns as entry trigger, like a bullish hammer, a bearish engulfing pattern, etc. So that is what I mean by entry trigger. And the fourth category is trade management. This is where indicators can shine, right? You can use your indicators like, let's say, parabolic SAR to trail your stop loss. You can use the Donchian channel to trail your stop loss. You can use the average true range indicator to help you set your initial stop loss. This is how you can use indicators to manage your trades. All right, so these are the four main categories, right, that indicators can help you with your trading. So now the question is, again, right, how many indicators should I use? Well, that depends on what do you need. Do you need a tool to help you define the trend? Do you need an indicator to help you, time your entry? Do you need an indicator to help you manage your trade? So once you can answer those questions, then you know which, or rather, what are the appropriate indicators that you should be using. So for example, let's say you are an indicator junkie, right? You want to use indicators to help you, enter, exit, manage your trades. Right, then I would say, then you can use, 4 indicators. One to help you define the trend, one to define your area of value, one as an entry trigger, and one to manage your trade. 4 indicators. Or maybe you are someone who is familiar with price action trading. You can define your trend using, price action. You can identify your area of value using support, resistance, trend line. You don't need indicators for it, right? Or maybe you also can use a price action to help you, time your entry using candlestick patterns. Then at this point, right, maybe the only indicator that you need to manage your trade is for trade management. Maybe you can use an indicator like a moving average, etc. So that's one indicator that you just need, right? So can you see where I'm coming from? Is that there is no there is no best combination of indicators that you must be using, because it all depends, right, on your needs as a trader. So think about these 4 categories that I've just shared with you, right? What indicators can be used for? Number 1, to help you define the trend. Number 2, help you define the area of value. Number 3, to serve as an entry trigger to enter a trade. And number 4, as trade management tool, right, to help you manage your trade, right? So if you have if you need things, right, to help you manage these 4 categories, then indicators can help you with it. But if you don't need indicators for it, right, then hey, you don't have to use it. Does it make sense? So with that said, I've come to the end of today's episode. I'll talk to you soon.